Welcome back to Sudden Wealth. It's a pleasure to be here tonight again. And I actually had a few ideas to discuss around the gold market. Silver is of course, linked to gold, but it has a very industrial base, which means it's more impacted by recessions and periods of economic boom. So, to a certain extent, it works a bit differently. You basically have two camps. You have gold is finished, gold has no value, gold is a terrible investment, gold is outdated, and on the other side you have the gold bugs. Gold is the second coming of Jesus. If we use gold, all the world problems will disappear. On the brink of an eye, the US dollar will collapse tomorrow. This is the camp of the Peter Schiffs, where basically they've been wrong for, let's say, 20 years plus on almost everything. But they do gather a huge following. Most of their diagnoses sounds right, but reality shows different. In any case, first point, the easiest one. Does gold have value? Yes, it does. Is it a good alternative to fiat currencies? I would say over very long periods of time, yes. So, for example, an ounce of gold would buy you a toga in the Roman Empire. It would buy you a very nice suit 100 years ago. It would buy you a nice suit right now. So over centuries or millennia, it holds up value fairly well. Problems: cumbersome to transport. You need to trust someone else to hold it. Governments have confiscated it and can confiscate it at any time. So those are the big no-nos for gold, if you will. However, it does hold its value over centuries and millennia. Now, what is the major, in my opinion, the major mistake of gold bugs? Gold bugs believe gold is an inflation hedge. I think it's not. I think real estate, for example, is a good inflation hedge, but I don't think gold is an inflation hedge. But the thing is, something happened after the 70s that gave the impression that it was. So people operate on the same assumption, which I now believe we have such a long body of evidence that it's not. I do think it's time to drop this theory. Now, what do I mean? 1971, Nixon takes the US dollar from the gold standard. That means that if you carry $35, you can no longer redeem it for an ounce of gold. So prior to 1971, you would go to any bank in the US and say, hey, here is $35, give me an ounce of gold. So the dollar was backed by gold, and the other currencies in the world after the Second World War backed their currencies with US dollars. Now, when Nixon took the dollar from the gold standard, gold went from $35 to $800 in 1981 or 82. Now, what happened? Why this huge spike? Well, you need to understand that entire generations of people were accustomed or were used to have gold as money. So when the dollar stopped being backed by gold, there was a lot of confusion and a lot of volatility in the markets, and people just buying gold because they need it was supposed to be money. Other countries were somewhat distrustful of the US, so they were also buying gold. So gold was going up. What was happening at the same time? Inflation was starting to rise quite aggressively. So stocks and bonds in particular were getting destroyed. However, gold was going up. So what do you think happened? As gold goes up, and it's basically the only thing going up, as well as silver, of course. So people buy gold. Why they buy gold? Because it's going up. So they buy gold, so it's going up. So they buy gold, so it's going up. So they buy gold, and then it's going up until it hits about $800. Now, 1982, which is around the peak of that gold bull market, the other markets, bonds, equities, start to enter into their own bull market. So basically, this long bear market with high levels of inflation is coming to an end. And I mean, at the time, you could get a treasury bond at 18%. Can you imagine, as interest rates decreased from 18 to 0, how much that bond was worth by the end, like a 30-year-old bond by the end of it? I mean, it was the golden age for bonds. But with bonds also came the equities. And so gold lost its appeal. It traded. I mean, gold at the time traded almost like a crypto, And then you have this psychology of bubbles, in which it goes up, so people buy, so it goes up, so people buy, so it goes up, so people buy, until it drops enough from the parabola that makes people uncomfortable. And particularly if other markets start to look more appealing, the money will flow into those markets. Now, if you actually look at gold adjusted for inflation in the past 40 years, it didn't hold up its value. Actually, gold is down versus 40 years ago, adjusted for inflation. What about now? Gold is down versus its peak in 2011. Not even inflation adjusted, just outright versus the dollar, it's down. And the dollar is the lowest. I mean, can you find a weaker target than fiat? The fiat currency? I mean, it's very high. But still, gold is down outright just versus the dollar. Not even inflation adjusted. Inflation adjusted is even worse. For you to have an idea, gold needs to hit about $2,600 just for people that bought in 2011 to break even in real terms, meaning adjusted for inflation. Think about it, 2,600 just to break even after 12 years. And after, and here's the key, after unprecedented levels of money printing, unprecedented levels of stimulus, people being told to stay at home, no production. So this should have been the environment for gold to shine, no pun intended. Silver is even worse. Silver is about 50% down. It's 1980 peak, outright versus the dollar. Not even inflation adjusted. Inflation adjusted, I don't know. I think probably you need silver to hit, $400 just to break even versus the peak in 1980. It's terrible. These assets, I think, what happened in 1970, since from 1971 to 1982, was a mixture of everything was going down except gold, because there was a major shift in the world, which is the dollar going out of the gold standard. Number two, as it was going up very rapidly, people buy it because it's going up. So people buy it because it's going up. And you kind of create a very highly focused bubble. So I do believe gold has lost its monetary status, and I don't believe it's an inflation hedge anymore. I know it's a very unpopular opinion, but I mean, if it's down 40 years ago, that's almost half a century. And it's down, not even inflation adjusted. In the case of 40 years ago, inflation adjusted. And it's down 12 years ago, not even inflation adjusted. After all the conditions possible in the favor of gold, theoretically speaking, for gold to flourish, the only conclusion seems to me that gold is no longer seen as a form of money in general, and it's no longer seen as an inflation hedge. Now, is gold-backed currencies better than what we have right now? Oh yeah, there's no doubt about it. It forces politicians to be accountable. If you deviate, if you have these ridiculous spendings and printing of money, and your currency is linked to gold, your currency devalues so quickly that that everyone understands very well that what the government did caused the highest levels of inflation they were facing. And because of that, governments hate it. So governments will not tolerate gold as money anymore, in my opinion. And there's also another issue, which is Bitcoin is actually a better form of money than gold. It's much more difficult to confiscate. You don't need custodians. And the rules of Bitcoin are set out, which means there's no government to come and change the rules midway of the money. It inflates, whatever it inflates, and there will be 21 million of that, and that's it. Unless they change the consensus network, but that destroys the whole purpose of money, of Bitcoin as money. But is also a possibility. In any case, it's not so much, do I think Bitcoin is a better form of money than gold? What I think is not very relevant. What matters is, what do people perceive, and what will people perceive in the future, particularly as we become more digital every single year, as more valuable, gold or Bitcoin. So far, I would say Bitcoin is destroying gold, but gold has the advantage of its history. In summary, I do think both sides are to some extent wrong, but I've seen many arguments against gold, but I never seen people just saying it's no longer an inflation hedge. It's no longer a monetary asset. If you will, it's actually facing some sort of crisis of what exactly is gold. Is it an industrial metal? Or is it a commodity? Is it part of the commodity cycle? Is it money? Is it an inflation hedge? Because in certain pockets, it seems to be failing in multiple fronts. It's like people don't know exactly when to buy it. Well, it seems to go up when a big war starts or when a bank goes bankrupt. That's it. But it's not an inflation hedge. That's, if you will, a catastrophe hedge, almost like an insurance policy, if you will. But I mean, then you would buy it to the same level you buy just a little bit of insurance. But this thing as gold is a better form of money or an inflation hedge, I just think the data in the last 40 years completely disprove it. So that was my take. I know it's a bit controversial, but yeah, I'm just looking at the data. I don't have any love or hatred for assets. To me, it's just, you take the narrative and then it's up to you, okay, does this narrative actually make sense? How does it compare to the data available? And you make your own conclusions. So guys, I hope you enjoyed and see you in the next one.